Solanyemi me, meneso, lebi ne hwe, minyemi yo, na yeye adumwa. Nick Insurance TV, oda so lebi ni kasemo ye insurance mi. Lebi ne waba eko. Mini jino ni wakasio. Life insurance, he nuchumo, ke he ni kasemo, ke gbejiano towe. Lebi ne noni waba kase, yake. Gbejiano towe koye, ni blofo ba ke term assurance. Be ni woke insurance bi baba gbe pamo. Ake wo gbejano towe eya keyashi. Nikeji na kembe she be woke insurance biye nuchumo ebanagbe alo wofumi. Wogbe wo nuchumo na. Amehu wonokwemo na meke hawo yeneke gbejano to ne miye nohu ebanagbe ke na kembe ni wotowe eshe. Ne wobo ubabiake ewole ke gbejano to ne te eyoten. Ni also wabanye wokwe nibi ni wabanye wokefe neke gbejano to ne lo. Ekome wabakwe wo gbejano to ne miye eko keji aleno ko yo phone ko achawo nigbele tete ya jemi. Wabakake ewo keji aleno moko chonse. Ewo yeneke gbefan ke moko chonse gbejano to jia keshin insurance bi ba shika ni akebawa ke hafun ke hanofiano. Noni jienyo gbejano to koye ke ha ekule ohe shia ni banki ko ba habo shika no ke wo neke shia no hiyo nemi. Ale no ke koyo phone ko ya tra. Beni ato ni sano ke wo banki biya nyomo ogbe na obana keke fe ablang. Ewo gbejano towe kuku boji ake oba hani insurance nuchumo eko amoni nemi ake kecha leno niko yo phone ko ya tra. Ni onyen okon no wo neke nyomo ne insurance biye ba wo nyomo amehabo. Na agbe noni woke wo term assurance jia keshin. Neke gbejano to ne kecha leno oye nuchumo nuchumo ka oshuono. Ni aleno oya fashika ni oke wo nuchumo ni. Boji moni oya aleno ke oshinako ya ba na mwaba amu. Asimo na home company asimo ni company alo se afe basa. Mewo abaka kebe gbejano to ne miye wokwe kuni insurance aba yake insurance wose keji oshinako ya ba nojino ni abamo mumi alo abalwa ni company adomushi. Ewo mwene nibi wonika semo pe jake insurance gbejano towe wohiyo nike kwe keja leno bile ya aba boni woba chomo nibi boni woba fe nibi ni afnye afun papa alo mami ojugba wokwe mortgage wokwe keyman insurance meni jino ni ule cha romanya blau. Hello, good morning. It's Thursday morning and Nick Insurance TV brings you insurance education. We have talked about life insurance, the benefits of it, and today what we want to look at is types of life insurance. Now, one product or a type of policy under life is term assurance. This policy is cheap. This policy has no investment link. This policy can be tailor-made for a specific period of time. And therefore, it is very flexible, as we may know. This policy, term assurance, has no surrender value. When we talk about surrender value, we mean that if the policy comes to an end, all that you have paid has gone into the protection, the pure protection of you in the period of time that the policy is running. So when the term is over, your contract, the relationship between you and the insurance company also ends because it is for specific period of time. Now let's look at some of the examples of term assurance. Example is funeral policy. What funeral policy says or seeks to do is to protect against the risks of death for the principal being yourself as you take the policy or any other person you put on the policy. As soon as death occurs, the policy comes to an end. If you took the policy and added somebody on the policy, when that person passed on to glory, the contract between you and the insurance company for that person ceases term specific. Now, if you being the principal assured passes on, the insurance company gives the benefit of the policy to your dependents. So that's one form of term assurance. Specific, is cheap, it has no surrender value, is flexible. The second example of term assurance is mortgage policy. You know, when we buy a house, we're getting a loan or a facility to pay, there's specific years for which the mortgage will run. It works the same with insurance. Now, if you're not buying outright and you're getting a loan from a bank or a facility, the insurance company will make sure that you have the guarantee of an insurance company to say that when the risk of death occur or disability which renders you unable to pay the loan, what happens is that the insurance company will pay off. Then we have what is called keyman. This keyman policy is also specific for the period of the time that you take the loan to put in a business or whatever reason for which you take the loan, you are the key person. And so what happens is that insurance will guarantee for the period of the loan facility. Now, as a key person of the company or the entity or the organization, the question is, when you passed on, when the risk of death occur, who will pay the loans that you have? That's where insurance comes in to guarantee. So your survivors do not have to sell the company to be able to do the pay off the loan. These are the types of term assurance policy. Understanding we've gotten today that term assurance is specific for a specific period of time, is cheap, is a guarantee that the insurance company will pay for the anyone that you owe or are indebted to at the time of risk. Insurance, what do you know?